All right, so back Livermore Partners. I've had Livermore Partners about 9 years. Like I said, we're an event-driven fund out of Chicago. We focus on event-driven special situations. We do a lot of work in the resource space, financials, but remain agnostic to different themes. So over the past, like I said, 9 years, we've run about 8 activist processes. I'm on 3 different boards, and we've helped unlock substantial shareholder value over the years. For being a small fund, Livermore's had an excellent track record. And again, we've invoked a number of processes with unlocked returns. You can go next, Nathan. So our current performance, we're down this year having trouble. And I think mainly that's given to our overhang of last year. If you see our returns last year, and even if you see our returns over the past 4 years, they've been exceptional. So on a return over the past few years, we've generated a return of over 300%, which is better than the S&P. You can, next one. Now, the first company we're going to talk about is Vista Oil and Gas, which is a stock we actually followed the last few years. It's a small oil and gas company with about 700 million enterprise value today. Vista was a SPAC formed by PE giant Riverstone Holdings about 4 years ago with the goal of developing the Vaca Muerta play in Argentina, which is supposed to be the next great shale play. So what interests me about Vista is they have very strong leadership and management team. They have a number of undeveloped locations in the Vaca Muerta, over 400. And they also have an interesting dynamic where they have conventional wells and they have their shale wells. And their type curves on their shale wells, which they haven't drilled that many, have been beyond what their expectations have been. So in the current price environment, we had oil go down, Brent down to $20 a barrel. It's now rebounded closer to $40 a barrel. Argentina put in a decree just a month ago, which means that between now and the year end, they'll be receiving a $45 price for their oil. And to me, there's the intrinsic value of this company is substantially more than where it is today, trading in the low $3, like around $3.30 a share. You can go to the next slide. And this just tells you a little bit more about the basin itself, the Vaca Muerta, which again is in Argentina. It talks to you about the wells in terms of the P10 over the Permian wells on the right side. And it just shows you that one is the wells are exceptional to the Permian. The other is that the total organic compound TOC is greater than the Permian as well. So there's just great density and great porosity to these wells, which makes them exceptional. The downside to the company, I would say, is again, it's a growth avenue. It's one that needs to be developed. There are some super majors there in region, as you see on the slide on the left with YPF, which is the national oil company. You also have ExxonMobil, Total, Shell, and others. So they're an independent, and they're one of the largest independents in the area. Next slide. And I'll just last on Solgold, on Vista. What I like about it again is the stock has been blown down. They IPO'd in New York essentially last July at around $10 per share, which was about $1 billion market cap at the time. Since then, you had the Argentina elections, which saw the stock slide down to about $5 a share. And then, of course, with the oil slide, the shares have gotten down to around $3 a share. Also of note, there's some large fund managers who've been buying a big stake, including Seth Klarman owns, I believe, over a 5% stake in the company. Livermore owns a stake in the company of a great average price. And I think it's one of those companies that Vista, on a recovery in oil and further development of the field, you can see the shares double or even triple over the next 24 to 36 months. So our theme on oil and gas is very similar to gold and other resources like copper. So what I'm doing is essentially looking at these really small, unique companies that are small cap in nature, but they have really solid management teams and they could deliver and execute on their business plan. And when you find those teams and those assets, you have to invest in them on severe weakness. And over time, as it gets execution, you can see double and triple your value. And At Livermore, we've had a track record of doing that now for a number of years. We took a activist stake in one of the larger miners, Detour Gold, which is our last activist stake. We did that about 18 months ago. Detour, our average price was around 10.60 in Canadian terms. We helped push to change the board and the management team at Detour within 18 months. And just last year, Kirkland Lake acquired Detour at over $23 a share. So our next company we're going to talk about here is Solgold. Again, similar to Vista, where we think they have a very strong entrepreneurial management team. But again, this is a different resource. And oil, I'm bullish on over the next 2 to 3 years. In the short run, I think oil is still going to be in a very tough position, but that's when you need to acquire stocks. Solgold, different aspect. They're in the gold and copper resource focused company, and that has been in a bull market here for the past almost 2 years now. So Solgold is listed on the London Stock Exchange. It has a market cap of about $500 million. It's run by a guy named Nick Mather, who's a serial entrepreneur and has sold about 5 different companies. Solgold has the Alpala asset in Ecuador, which is this massive copper gold resource that is one of the biggest discoveries in the past 10 years. So we like Solgold for a number of different reasons. On the event-driven theme, it's a great asset. You have some big shareholders that own the stock, including BHP and Newcrest. So you have commercial players that are invested in the company. BHP is the largest holder with over a 14% stake in it. So to me, that gives the potential optionality where the company could be a takeover target. The stock's currently around 23 pence a share in London. It's up about 15% of the year, so it's having a good year. But if you look back, it's actually been a much higher. And the net asset value, net present value of the Apollo asset is somewhere around over $4 billion, which will take, again, significant resources to develop it. And that was one of my theses in terms of Solgold will look to either a partner or will look to be acquired outright, which you can see the share price then double from the current market cap. And we think, again, well-run company, great asset. It's in a bull market. I think the downside risks are, again, similar to Vista, which you have political instability in South America. It's also, of course, an emerging market, so you're not buying something in the US per se. But again, to take that risk, you see massive potential and optionality in both company shares. And those are things we look for. And that's how, again, we've been able to have strong returns in the past number of years. We have another slide. Yeah, this just talks a bit about Ecuador and the different belts versus other different mines, which again, for Solgold, it shows here that Apollo is just this massive deposit. And we think, again, it's very attractive to a number of potential suitors. We have another slide there. And that just talks a little bit more about Livermore. And again, we were looking at situations like Vista Oil and Gas, like Solgold and so many others we've been involved in. And we like the resource space. We think there's a path forward as all the debasement happening throughout the world with global stimulus is going to ultimately lead to inflation or even potential stagflation. And with that, you want to own assets that are tied to inflation. And there's no better way to do that than to buy discounted assets that obviously will appreciate more in value as that comes true.
All right. Thank you, David. Apologies again for the technical difficulties. Would seem almost unavoidable nowadays with these things. But yeah, very interesting presentation. I mean, you do mention it here, the downside potential. It does seem that, the V-type, I mean, it is priced in now, the V-shape economic recovery, right? Or appears to be almost. Mm-hmm. We're not economists here, but how close are you paying attention to that? And how, I mean, obviously we all know copper tends to move with that pretty closely. And also China is the big buyer of copper, aren't they? And if the Chinese economy slows and wouldn't that, if there's, global demand for copper that kind of falls off a cliff again. Yeah, how big of a concern is that?
It's always a concern. But I would tell you that that's been a concern for a number of years, and that's led to a lot of less investment, less capex in new mines and new projects. And I've never been a big gold bug, but in the past 2 years, like I said, we started taking over a 10% stake in specific miners. Based on the fact that you're seeing all this stimulus and the fact that you're also going to go into deficits in terms of production, both on things like gold or even copper, and you're just not finding the kind of discoveries that you have in the past. I mean, remember one thing, that the Fed can't print gold, Fed can't print copper, and these assets also take a long time to develop, even once you have a mine, and also on budget, on cost, and profitable. And our focus, even as shareholders, on a number of the companies we're involved with, including Jadestone Energy, which was an activist process years ago, is we're trying to focus these companies and these management teams on delivering profitable, on-time projects so that they're actually shareholder value. It's not growing volumes just for the sake of growing volumes in production. We think that's a failed process, and you can see that in any type of Permian assets of an oil company, where they've grown production through mostly debt for a number of years, and then when you have prices capitulate, all of a sudden those companies are looking for our cash. Our Jadestone, my example, is just that we're a free cash flow company. We have zero debt, and these companies again are younger, more development stage companies, but Vista does have 25,000 barrels a day of production, with, just like I said, a long pipeline of potential to grow production over 100,000 barrels a day, which would make it, well back over to where that high was you see there in July of 19 of $10 a share. I think potentially even higher. So you have to look out a few years on these things. And again, we're trying to buy them at levels in which we think the intrinsic value is at least double where they're at today. And on both those companies, we see that. So the view today is, like I said, that there's been a lot less investment in the sector, a lot less mines. So it always concerns me, like you said, when you talk about global issues going on in terms of the macro. And today, like you said, the market is just a few percent off where we started the year, which is ultimately amazing to me. I think it's liquidity led. And again, if anything, that shows you that at some point in time, you want to own resource-based hard assets instead of some of the tech.
Yeah, a question here just came in from the audience. Fair value of Vista Oil. Do you have one?
I think for Vista, again, you have to be able to plug in what do you view the nominal price of crude oil for 1 year and 3 years and 5 years. So the positive for them is that they are trying to, even today, they shut in some of the shale production. Their goal is to be cash flow neutral this year. They obviously had this decree by the government of Argentina at $45 a barrel Brent for the rest of the year, which obviously gives them great flexibility to have that break even. But the goal is, you don't want to be a break even company. You want to see their production gain and their cash flows generate substantially, which will take more investment. So you're going to have to see them putting more money in the ground over the next few years. But again, the results on their wells has been substantial. And I would say fair value, even under $45 to $50 Brent, which I would say be the next 2 years at least, I could see the shares rise back at least around that $5, $6 range, which would be about a 500 million market cap. I think under, like I said, the growth scenario, remember, this is a growth company, unlike a lot of oil companies. I think the growth scenario is once they're able to start delivering further new wells and you start to see the type curves on that and the production growth and oil normalize, the stock has just huge potential, because then I would argue that, fair value could be somewhere around that $9, $10 price point. And I think if you can really accelerate the productivity and the wells over the next, say, 3 to 5 years, the stock does have the potential, I'm saying, to get to be more around mid-teens, even $20 a share under some bull case assumptions.
Right. You're an activist investor. You do a lot of activist situations. Do you know the management of these companies?
Yeah. So, one of the things I like about both these companies is, I know and have met both of the management teams. Vista has actually been here through Chicago, even, so I've always maintained a strong contact with them, and even get together with them when I can. And the same thing with Solgold. And that's what I really like, is they're both proven leaders, proven management teams that will develop things and eventually sell them. So Marcio Galucio is the CEO of Vista Oil and Gas, and he used to be the CEO of YPF, which is the national oil company there in Argentina. And again, so he has all the, he has great connections in terms of government. He has great connections in terms of the space. He's got great connections in terms of the investment space with Riverstone Holdings, the $27 billion private equity firm, is an investor, took it public, and they still own, I believe, around 12% of the shares. So you have huge backing. I think you have a number of pension funds that are invested. The Abu Dhabi, I believe, pension funds invested in Vista Oil and Gas, and as well as CPP in Canada. And then you have some other just larger investors, like I said, Seth Clearman, who's a new investor over the past 6 months to Vista Oil and Gas, that owns over a 5% stake. So we're in good company is what I'm trying to say. And I think they see what we see, which is the assets look strong and the management looks strong. And you really need both in this kind of environment to see a big upside.
Yeah. All right. Well, there you have it. Vista and Solgold, David's two picks. Solgold, thank you so much for that. And there are no other questions. And I'm trying to think if there's anything. I don't have anything. So that pretty much concludes this webcast.